All right, welcome back to MMG. So finally, we're starting to see a pullback or a correction that I've been anticipating for since last week, right? It's never gonna happen the same day I make a video, guys. I try to predict or anticipate moves. I'm forward looking, not in the present. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. This is an educational channel, and just listening to me rant and give you guys my opinions. I could be completely wrong. Stocks, extremely risky, extremely volatile. If you don't know what you're doing, don't trade. Don't invest. Only invest what you're willing to lose or lose sleep over. Have stops in place and emotions out. Okay. So, Trump was just talking to Tim Cook from Apple, right? Look at the market cap of Apple. It's huge compared to the rest of the market. And Trump's trying to get Apple to manufacture in the United States. And I get it. He's trying to bring back manufacturing. That is another reason why today news broke. Listen, guys. I'm not even gonna report on the trade deal. It's a waste of time. I already made that video, the Winnie the Pooh video, right? I told you guys there's not going to be a trade deal, and there shouldn't be. I mean, come on. They have millions of people like in camps in China, and they're selling to the highest bidder. Parts and accessories, right, of humans. So there's not going to be a trade deal, believe me. Neither side really wants it. It's full-blown cold. It's like a cold war, but economic warfare between US and China. That is another reason why Trump is attacking China and doing the trade war. Nobody wins a trade war, but I think the game plan is, if they could destroy China's economies first, then as the whole entire global economy resets, the U.S. will be the last man standing. And if the U.S. is the last one standing, when they go to they're going to make a new international monetary system, right? So the U.S. wants to be the last one standing because it'll have more power, more votes, and more other countries on its side, because they will be able to grant them favors, and then they could sway the new financial system, global system, towards the U.S.'s side. That's what I'm thinking that they want to do. Of course, the other scenario is China comes out of this next global financial crisis. China comes out of it stronger than the U.S. and the rest. And that's actually a really good possibility because of the One Belt, One Road initiative, that trade route that goes across Europe, Middle East, into Africa. They even want to do it to South America and all the way up into Russia and Europe, right? So, and China also has the world's largest manufacturing base, which to an Austrian economist, I would consider that the fact that they have plants and tools and they can manufacture goods and export it to the world means they really are the strongest economy in the world. Even now, China probably is, in the sense of they have all the manufacturing jobs, but the U.S. still has the dollar as the world reserve currency and its giant financial markets that can temporarily sway things in the U.S.'s benefit. So what's going to happen? And there's not going to be a trade deal. The only reason Trump even comes out and says we're still talking trade, this and that, is to calm the markets. It's so the stock market doesn't tank. All right, and that's the game. The game is Trump needs to keep the confidence going for the markets. Meanwhile, in full-blown economic warfare and trade warfare with China and Europe eventually as well. See, Trump's not stupid, and he's putting the United States first, and that means the rest of the world has to fall before the U.S. The U.S. is gonna fall too, but the scary thing about the U.S. is look at the stock market, guys. Look at this: Google, Facebook, Amazon, Microsoft, J.P. Morgan, and Apple are the largest companies on the exchanges. That's not a healthy economy. That's a service sector economy. Come on, Facebook, like digital platform, social media, search engine, software for computers. I mean, I understand that Microsoft is big and it should be one of the big, but Amazon very large now. But again, Amazon's just an online platform. But well, no, not anymore. It used to be. It obviously they have huge warehouses and they do mass shipment, same day delivery for all goods and services, right? And they're moving into retail and grocery stores and whatnot. Listen, these are all overvalued, of course, but a healthy economy, in my eyes, would be the industrial section of the economy. This part. See, the United States in the early 1900s, the companies that made things were the biggest companies. The Dow Jones Industrial was the most important part of the market, not the S&P 500 and not the Nasdaq. It was actually manufacturing companies, Ford, GM, all those companies. But and not just that, like Caterpillar, and I get Caterpillar is still here and it's still big, but they should be the largest sections of the economy. It shouldn't be digital online platforms. And I get it. These days, that's been the new innovation in humanity. It's been the internet and technology. And, that's not going to last forever. So there's going to, as cyclically as you look at, we've had in the early 1900s, we had an industrial manufacturing boom. Now we just had a technological internet boom, right? Well, the internet bubble already burst in 2000, but this is what's left over. Well, things are going to reset again, and technology is not going to become as important. I mean, it's always going to be important, really important, but it's a bubble, okay? And that's also from, the endless debasement of currency and credit expansion. So, right now, the market's pulling back as I anticipated. And it was because, it was really overextended. So, let's take a look at some TA. Let's do some TA. I was looking at the monthly chart of the S&P 500. Look at this expansion since 2009. Since March 2009. Look at this. That is enormous. Look at this. Longest running bull market in history. I made a channel. And it's not perfect. It's broken the channel. This is when the plunge protection team came in and saved the market, right? But it's been trading inside the channel. And now we're at the top of the channel. So, and we're starting to pull back already, as anticipated. So I'm guessing we could test the bottom of the channel around 2,900. Let's take a look at a weekly chart. Well, let's take a look at the oscillators before I go to the weekly chart. Oscillators are overextended a little bit, not too much on the monthly, but they are. The moving averages, the 52 period moving average, it's extremely, look at this gap. It's overextended from the other moving averages. And whenever we have a recession, the 52 revisits the 100, right? Well, look at this. At some point, I'm not saying anytime soon, I'm not saying next month, I'm not even saying 2020, but at some point, This 52 is going to revisit the 100 as historically it has in the past, right? All right, so I'm thinking, let's take a look at the weekly. Take away the, well, no. Let's take a look at the weekly. Weekly. All right. So here's the channel. The TDI is not giving me a 9 sell or anything on the weekly. It's on a 5. But you know, we've seen it sell off even with the 5, like it did right back here. Either way, we've tested the top part of this channel, so I'm expecting you know, a pullback, a correction, something. Will it revisit the bottom of the channel? I don't know. Not yet. So what you would do is, let's say you wanted to short the S&P or whatever, anything right now. You would place the short or buy the inverse ETF or whatever, and place a stop to cut your losses short, and then you ride it and you see how low it will go, and then you eventually take profits when you see a bounce or a rebound, or whenever your indicators tell you that we're possibly going to get a rebound, right, or a decent bounce. Now, you would also look at moving averages, the Shimoku cloud, all sorts of indicators, oscillators, you know, these things at the bottom. So the RSI is overextended on the weekly. Another reason why this pullback will probably continue and the correction will continue into the end of this year. Let's take a look at the daily chart, or let's take a look at the 3-day chart. Ah, perfect. See, this is why I look at the 3-day chart. I have a 9 sell, TDI 9 sell, perfect sell with the TD indicator, and the heat map is giving me a sell signal as well. And I expect the price to correct and pull back and dip. Now there is some support at, again, 2,900 on the S&P. So this could last into the end of the year. Or a month, something like that. We'll see how fast it drops, right? It all depends on how fast it drops. It could drop slowly. It could drop quickly. I would think it would drop quickly because there has to be a huge air pocket in this area. Huge air pocket from all the manipulation they've been doing as of late. And people have to be getting nervous, you know? Although I feel like the dip buyers are going to be around until we make a new low. A new swing low on the 3-day chart here. Which would mean if the price actually got below 2,900, especially 2,800, then the market's going to panic. Let's take it to a daily. The daily had a 9 sell as well. And I post these in the private group. By the way, go to my website, 15% off for holiday sale. If you're interested in gold, silver mining stocks and research, and if you want to learn how to trade, I show you guys the indicators I use, and the private group, we share information to catch opportunities, especially in the gold, silver, and mining sector, because I'm thinking that'll be the largest wealth transfer. It's the only asset that is undervalued and still has much more room to run up. I'll talk about gold in a second, silver. I'll do TA on it. So look at this drop. This is beautiful. Nice drop. And this just happened quickly, within an hour, because of the trade talks BS, whatever. Daily is also extremely overextended, and I told you guys this in my last video, my last 2 videos. Look at this. MACD's crossing to the downside. Momentum's falling. TM squeeze. I have a red signal right here. These red dots mean it's correction time. And there's much more downside, according to TM squeeze. So there we go. Four-hour chart. I do have some buy signals on the 4-hourly. We do have a green Ishimoku cloud. So we'll see on the short term. Maybe it'll trade sideways the rest of this week, but eventually this week and next week, I think we're overdue for a decent sized correction. Like I said, back to 2,900 is, well, maybe not 2,900. I see, like I said, I don't know. You don't know. I'm not a prophet. So all I know is we're due for a correction and a pullback. So you just wait and watch. And then when you start seeing some signals that the selling's over with, maybe Trump will tweet something or whatever. Again, there's a lot of support as well at 2980. There's some support at 3000 as well. So we'll see how deep this correction or pullback will be. I would love for this correction to revisit the bottom part of the channel. Why? Well, that would still give us a higher low than the previous if you took it to the daily or weekly chart. But that would mean that the Fed will panic and they will start cutting more rates, and who knows what else they'll talk about, maybe QE. And then gold and silver will just skyrocket, maybe make new all-time highs. I'm not saying that's going to happen. I would be impressed if it just got to 1680. But that would be nice if the market did tank all the way down to here, around 2,800. So let's this is interesting. Apple on the monthly time frame is on a TD9 sell. So Apple, one of the largest market cap weighted stocks, on the entire market, is it has a 9 sell, and it's extremely overextended to the upside. So if Apple drops in a big way, which I wouldn't be surprised if they do, because their earnings might not be that great for this holiday season. Listen, guys, Apple hasn't innovated much on their phones. I don't know why people buy them and pay so much for them, besides the social status, and I hate those people, right? I think they're cool because they have Apple products. It's way over. Apple has, I feel like it's seen its glory days, and it's not innovating. Jobs is gone. It's not the same company. And even if they bring back manufacturing to US, that'll just make their phones even more expensive. And if they're not innovating, I just don't see how people can keep affording these $2,000 phones or whatever it is. So if Apple revisited $200 on its share price, that's going to pull down the rest of the entire market. I'm not saying short Apple, but I should have put on a position to short it. We'll see. I mean, this is the monthly still, so here's Alphabet. Google actually looks like it's going to break higher. This pattern right here, it's an ascending triangle, sorta. But if the entire market falls, I mean, it'll take it with it as well. Here's Amazon. I don't, symmetric triangle. It could go either way. Here's JP Morgan, extremely overextended. Here's the thing. I think the market's going to pull back and correct, and then the rest of these stocks will do the same as well, if not trade sideways. Some of them trade sideways when the market pulls back. It all depends how deep the correction is on the indices, like the S&P, NASDAQ, Russell, Dow, right? So in the private group, I told the guys, I'm like, the VIX might be a good trade for the very short term. You do not hold the VIX, but for a short term pop, you can get a nice little percentage gain. Here's the VIX. It's the volatility index, right? So when there's no volatility and the stocks keep going higher and higher and the entire market's going higher, then there's no volatility and the VIX falls. So this is like an inverse play to the stock market, right? Instead of shorting, you could just go long on the VIX. And I know the VIX is probably manipulated, but if you're very quick, if you're a good trader and you're quick, you can get some real nice pops on this sucker. Like, look at this. This was earlier this year, the beginning of this year, at the end of 2018, when the market fell like 20%. Look at this. And I called that trade, if you guys remember. I said, I'm putting on a position on the VIX, and it worked out really well. Went from $11. At its peak, it was 36, 35. But, it's really hard. These are days. Or no, this is a 4-hour chart. The hell? I'm looking at the wrong thing here. All right. Here we go. 2018. Yeah, the VIX popped in one day. So you would have to do this. This is a day trade. You should only day trade the VIX. So in one day it popped 500%. But the thing is, it's a day trade. And, you have to be quick with the VIX. Real quick. And I would never put on a large position. Just a small one. Okay, so let's talk about the dollar. Here's the daily chart on the dollar. Dollar's been falling for the past few weeks. It's still falling right now, which is good. I hope it revisits the 97 handle, so it helps gold and silver rally even harder, especially while the market's pulling back. But let's take a look at the weekly for the dollar. So in the newsroom, in the free chat group, I posted a Jim Rogers video, and he thinks the dollar is going to strengthen, pretty much the milkshake theory, right? Where the dollar is just going to keep strengthening and strengthening because the U.S. will be the last domino to fall. And he may be right. So when I say the dollar is going to fall, it might pull back because Trump says he wants a weaker dollar as well for trade. I think they want a sweet spot somewhere around the 95 handle for the dollar. Will the dollar spike when everything really starts going to shit, right? Probably. The question is how high. Will it make new highs, or will it just, maybe the dollar for the next few months will weaken, or for the 2020 will weaken all the way down to the 94, 95 handle, right? And then the SHTF happens, and globally, and then the dollar spikes back up maybe to 100 or something. I don't know. But I'm only thinking short term with the dollar. Right now, short term, I mean weeks and months, not years. So right now, well, years, I mean long term, it's definitely going to suffer. It's totally going to suffer. Especially if Powell keeps cutting rates to like 0 or negative, as Trump and Powell probably discussed a few days ago. And then the dollar is definitely going to weaken. It might weaken. It might fall, back all the way back down like in the earlier 2000s. The dollar index used to be down in the 80s. The very bottom in 2008 and 9 during the global financial crisis, it hit 70. So yeah, I mean it could fall back down to 80 by the end of next year easily. especially if the Fed's cutting more and more. So right now, I'm just waiting to see if for the short term. Once these moving averages do cross down to the downside, though, that's when you know the dollar is going down for the count for a while. So it's just something we have to monitor. Let's take a look at the yield, the 10-year. Here's the 10-year yield versus gold. And the yield's dropping as I anticipated and expected. And I've been saying for weeks now. I said this was a bounce and it should keep going lower because they have to keep it going lower because obviously something's going on with the repo market. And they don't want to, and they need to keep the rates going lower and lower and keep that yield curve, normal, or not, keep the yield curve as it is, right? Not inverted. They have to keep it from inverting. So what they need to do is get all the yields lower and lower for the short term all the way up to the 10-year. So, and, that's what they're doing behind scenes probably. But as long as the yield keeps dropping, metals will keep rising and gold should keep popping until something big happens. At that point, the yields could rise and so can metals. But we're not there yet, and I'm not sure when we will be there. But for now, this gives gold and silver a possibility for it to run a little bit higher. Also, with the repo market, guys, I think a bank blew up or something. I'll talk about that in a little bit. I have some more charts about that. Here's the S&P, Dow, NASDAQ, left-hand corner. Look at the NASDAQ. That thing really dropped today. Huh. And it's not bouncing like the S&P. The way they try to do it is they step in and they'll try to get they'll buy the indices like the S&P and then the Dow and then they hope everything else follows, but you can't do that forever. The Russell surprisingly is holding up right now because it does have sort of a bull flag here, right? Or a bullish pennant. And it is testing this major resistance area. So the Russell 2000, ironically, which has been the weakest out of all the indices, looks like it wants to go higher. Meanwhile, the other indices are extremely overextended and overbought. So the Russell might actually it might actually hold up the market. You know what? Let me bring up another Russell chart. That has all my has a fib on there. Should have brought up that chart. Let's wait for it to load. Relax. Have patience. Another thing in trading that you guys really need to learn is I've noticed that a lot of you just don't have patience. Like this isn't like a real job where the more productive you are, the more you work every day, and the better things will get. No, you just need patience, and you just patiently wait for the perfect opportunities. All right, this is a daily chart of the Russell. No, the Russell should sell off. I mean, the MACD's crossing to downside. TMs, all the oscillators are overextended, so so here was my bull flag for my last two videos, and it did break out from it, but this might be it, right? So I think it's gonna pull back. Let's take it to a 3-day for Russell 2000. Yeah, here we go. So we have a 9 sell on the 3-day for the Russell 2000, so I am expecting it to also pull back. I'm going to move this arrow over here. I did call it right, so. And then I'll put a. There we go. So yeah, I think we're gonna get a correction on the markets and equities, a continuation, a good correction. Here's the fangs. Kind of looks like the Russell. The moving averages are moving higher, and they're crossing my blue equilibrium line, which is extremely bullish. Except for the fact that this entire price rise for the last few weeks and months is kind of like it's been on low volume, and it's been based off of like tweets, and they've been pushing, it's been manipulated higher. So like I said, guys, manipulation, it can't last forever. It's always short term, never long term. All right, it's because smart money takes profits. That's why they're smart money. Here's all the currencies in the world. Gold has hit an all-time high in all of them except the dollar. The dollar is the last one. That's why the dollar is the strongest currency right now in the world. And I think that's going to have to change pretty soon. I mean, we have riots and all across the world. All across the world. Germany just had farmers protest the carbon taxes, right? France, UK has them with Brexit. Hong Kong, of course. And then even in the Middle East now with Iran. And then in South America, there's like, I don't know, like 5 countries. So all around the world, there's riots, and there's going to be more. You're going to see more. Maybe eventually you'll see Spain. You'll see Italy. So the dominoes are falling, and they're all heading for the U.S. because the U.S. will be last. So Trump might want to also weaken the dollar because all the emerging markets and the rest of the world, all their debt is denominated in dollars. Meaning, if the dollar stays strong, they're all going to keep defaulting, which is maybe that's the plan. I don't know. But you don't want it to happen too quickly because if the whole world goes, I mean, the quicker the US will fall as well. So it's kind of like it's a very, very fine balancing act, I feel like. And the more complex it gets and the more cracks and fissures we see globally, you're going to see them lose control eventually. And when they lose control, you're going to see shit like Mnuchin walking out and saying, no one panic, the banks are fine. Meanwhile, everyone's in the U.S. who's complacent as, oh hell, is like, what do you mean the banks are fine? No one ever said anything about them. Remember back in the beginning of 2019, end of 2018, that's what he did when the market dropped like 20%. So it's going to be, listen, 2020 is going to be very hectic and exciting and crazy and scary. And trading is going to be, it's not going to be easy. I wouldn't be trading large percentages of your entire account and capital because it's going to be volatile, very, very volatile, I feel like 2020. Here's the financials, also extremely overextended. We need a decent sized correction to pull back, guys. I mean, just look at this. From this is from December 2018 down here. All the way up to here. It would make sense for the market to at least pull back a little bit, even on the financials. Especially once we find out why the repo market is out of control. Why we have repo madness. Alright, I'll talk about gold and silver once I'm done talking about this. So here's a Fred chart. This is actually published by the central banks themselves. Here's the repo market. So the last time they were doing repos was in 2008, 2009. And then they just stopped because they were doing QE, which was just injecting, billions and billions every month, tens of billions, hundreds of billions every month for the past like decade. And then they stopped, and then they let the private sector and the private banks do the repo. As of late, look at this. This is nuts. Let me zoom in. Something has broken. They definitely broke something. Or a bank broke. I think a bank's in trouble. So all the private banks stopped lending. Another reason why JP Morgan took all their cash and stopped doing the overnight repos, and they parked them in 30-year bonds, right? Treasuries. So something broke, I think. And if this keeps going higher, I think the markets can't ignore it much longer. Why? Because the balance sheet of the Fed is also is starting to go back up. So the balance sheet actually started falling because the Fed was letting it mature, right? All the bonds and all the debt. And they started raising interest rates. In 2000, well, they first did one in 2016 or the end of 2015. Then then in 2017 and 18, that's why Trump kept complaining about the Fed. They started raising and hiking and hiking and hiking, and they actually shrunk their balance sheet. And what that did was it broke something. Probably a bank blew up or something. And now their balance sheet is expanding again. And this is for two reasons: to keep liquidity going for the banking sector that's pretty much essentially been nationalized now because of the Fed, and to keep the markets higher, right? Because the banks have to keep lending to keep the markets going higher. It's all intertwined, guys. So it's coming. Something big is coming. That Black Swan event, or the day is coming. I still don't know when. Nobody does. But I don't think it's far off into the future. It's definitely, if I could bet money on it, I think it'll happen in 2020. When in 2020, I'm not sure, but 2020. If nothing big happens in 2020, I don't know, guys. I don't know. Then I have, there's no way, in my opinion, that something big will not happen. Another 20% correction in the market. Interest rates spiking. The final nail in the coffin for the dollar and the economy will be interest rates spiking, and they can't stop it. I don't know when that's going to happen. That could happen after 2020. I'm just saying, someone filing for bankruptcy, something has to happen in 2020 that's going to rock the markets, and volatility is going to be insane. And it doesn't even have to be in the US. It could be in Europe. It could be in Asia, right? So what I'm trying to say is there's just so much debt, so much interest on it. It becomes increasingly complex to keep the music playing and to paper over everything. When I mean paper over, print. All right, gold. So I have a buy signal on the weekly for gold, as I said last week. And I'm hoping the price could get back above 1,500 at least in the next few weeks. Let's take it to a 3-day chart. It looks like it wants to continue to fall. Maybe down to 1440, but the next FOMC will be the end of December. I think if the markets pull back running into that next FOMC, precious metals prices should be rising. Gold should be rising going into that. Although, as of late, I mean, they have been really smashing it. On every open, they dump billions instantly to drop the price. Like, it's still being manipulated heavily. Although silver has been holding up, and it's if you get back above 18, it'll be very positive. Let's take it to a daily on gold here. So this is all consolidation. Here it tried breaking out, but they smashed it. Right now, I wouldn't be surprised if they smash it again and get the price back down to 1400. That's what I would do if I was them. So they will probably do that. We also have these moving averages crossing. It's kind of like a death cross. Let's go to the 3-day again. The thing is, the 3-day time frame and the weekly time frame for gold is extremely oversold now. So maybe short term they could slam it a little bit lower, but I think going into the end of this year, I think we'll be back above 1500. And then hopefully gold could get to 1680, maybe a little higher, and then we'll probably see months of downside. How low will it go? I don't know. What else did I want to... Another thing, if this S&P 500, I know I'm bouncing around now, if it really does go any higher, like for the next few weeks, that's actually really bad. Because then it's starting to go hyperbolic here, straight up. And that would give you a blow off top. So it's actually better than the S&P does not do this. Because that'll give you a blow off top. And that'll probably be it. And that would look like the perfect topping pattern for the S&P and the entire markets. So it's actually better for the S&P to pull back a little bit, and everyone at the Fed and the White House don't shit themselves and just let it pull back, and then higher it could go. I forgot to talk about that. All right, so let's get back to gold. Yeah, I mean the weekly and the 3-day are bullish still. Let's go to the 12-hourly on gold here. 12-hourly looks like we may see some more downside here. Although, again, like I said, if the market continues to pull back here and this correction continues in the market, the price of metals could trade sideways and then go even higher. Here's the 4-hourly time frame. There's a green Ishimoku cloud here as a ramp. And the 4-hourly, I mean, it's going to reset itself, but it's not selling off in a big way right now. So I'm thinking metals are going to trade sideways for a little bit longer, or they will start rising as the market corrects and pulls back. And I'll keep you guys updated. I'll keep making videos. Let's take a look at silver for a second. Okay, here's silver. Oh, look at this weekly chart. My blue line right here, and the price is above it. That's a great buying, great support level there for to buy the dip. Yeah, you know, silver might actually be the reason why gold's going to go higher. It just needs to get back above 18. If silver could just do that, then yeah, we'll see higher prices going into the end of the year. And then after that, you know, there will be corrections again. Here's the thing, though. The mining stocks, the gold and silver mining stocks, they've pulled back in a really big way from earlier this year, the rally in the mining stocks. And it's the perfect buying opportunity. So, you guys should take advantage of that 15% I'm giving you guys right now. Now, in the long run, is it a good idea to buy mining stocks now and then they run higher and then we see another large correction? I would want to have both positions, right? I personally I am like long on the mining stocks, but I could hedge my long positions with my trading account, right? But if you weren't trading and you were just buying for the long term, well, if you're buying for the long term, it doesn't matter. Now's the time to buy. Because you don't know if the prices on these mining stocks, once they rally again, will they correct back down to the current price. You just don't know. Because you don't know how high they will rally on the next leg up. So, yeah, that's pretty much all I have for now. Smash them likes, leave anything in the comment section, I will reply. And please share my videos, the only way my channel grows, and I'll continue to do this. And I'll see you guys in the free chat groups. If you haven't, check it out at least. Until next time.